I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, you've been warning investors to watch out for choppiness, and I think it's safe to say we have it. So what should investors do with the volatility?
I mean, if you think that the 10-year Treasury is done going higher and yield going lower, well, you'd be missing what's happening, which is that there's some accounts that may be on the wrong side of a trade. One of the things is my friend Matt Horian, writing partner, talks to me a lot. Globalization is capital flows. So in the old days, I remember when I bought Gilders, and I bought like 20 million Gilders. And it was actually quite complicated. And to undo the trade was quite complicated. Different desks, hard. There was a period where you were stuck with Gilders versus their bonds, and you could really get hurt. It's instant now. And market access with these companies where they help you trade bonds, instant. So instant capital flows means that if you wanted to buy the dollar and buy treasuries, you can do it like simultaneously. Now, what does that have to do with Caterpillar? All right, Caterpillar down badly today. Caterpillar with good yield. Caterpillar with actually a actual update as of this morning. That's why I mentioned it. An actual update this morning that is quite bullish. And the answer is that you either think that they're lying, which I don't think Jim Umbleby is doing, or he's not looking at the order book a month from now. I think this is a man who uniquely blew the quarter, unfortunately, but isn't going to do that again. So I have a letter from Chicago piece that came out this morning telling me that CAT was worth buying. In the meantime, CAT is down a gigantic amount at the top. Now, I often use stocks, this is not understood by people, as analogs, okay? When I use Emerson or 3M or CAT, when I'm talking about companies that get a great deal of business overseas, that obviously you must think must be doing worse because of the way treasuries are doing. Now, we also want to conflate the issue by saying central banks have to move. They don't have to move. The president does that. Jay Powell's been quiet. Obviously, there's lots of people in the Fed who think it. Interest rates that go down are bullish. They're bullish. And I only have history to go on. So my father gets back from World War II, GI Bill, school. Rates were at 1 3/4. And all my life I saw my dad pay down that mortgage on our house. It was $25,000. And $25,000 mortgage, and he paid regularly. And I always said, Dad, how could rates ever be that low? And he said, well, listen, after the war, that's what you had. So we have rates really low. And you could say, well, what we have to fear is fear itself here. But think about when FDR uttered those words. It was when our system was in the balance, and the center might not have helped. Here, the center's going to hold. Here, we're a beneficiary of lower rates. Here, companies can refinance. Here, the U.S. government, the president, should be issuing a $300 billion 30-year, which is probably going to be the lowest he's ever going to get for 30-year in the next few days, and take that $300 billion and support the farmers, because the farmers are being hurt by tariff, but then also just do the infrastructure. I mean, we have crumbling infrastructure in this country. We have a lot of projects. Now, can you put more people to work? It's actually hard to find people, but you'll find them. And you buy a lot of machinery, and therefore you help CAT. We need to be creative and constructive rather than, let's just say, hidebound and destructive. And it's very tough. This is something I wish that I was in some more, I mean, I'm not to aggrandize, but some more of a position of power so that I could say, okay, listen, I go into Treasury and I say, what we're going to do, we're going to do a $300 billion bond offering and take advantage of these low rates as opposed to just sit there or berate Powell. Low rates are good. And I just can't get my head around why low rates are suddenly bad when all my life they've been good. Now, fear and taking action off of fear is something that people routinely do. Just the other day I was talking about somebody who blew out of Apple 185 and then turned at 197. While it's happening, we all come up with a reason about why it's happening. I've listened to all our coverage here on CBC. There wasn't anyone who just said, listen, it's capital flows, and this is an opportunity. Now, when you buy something like a J&J at 128, it goes to 126, are you an idiot? Well, no, you can buy more if you have cash. If you don't have cash, you can sell things that don't have a yield and start buying, position yourself. Like I saw Novartis today. Novartis is down badly from its high, and Novartis is doing quite well. And I don't think that this issue, which is an issue involving fabrication of data, is going to hurt them. I've been waiting for the stock to come down. I thought the stock would go to 85 and be able to buy it. Boom. No, it didn't. Why? Because business is too good at Novartis, and there's not a lot of problems. So I always come back to the stocks because our people do not trade the S&P. Our people look at things, you look at things and you're trying to get income. a lot of people I speak to. Remember, I spoke to about 100 people yesterday outside. It's great to talk-
over
it's
at
great
your
to talk
Mad
to real
Money
people.
live show.
Right, and I talk to people. What are they looking for? They're looking for something with a bit of yield and a bit of growth. I guess if I am talking to them, you're one of those people. I could say to you, no, you see, you can't do that because the 10-year, the yields is falling. And a common sense person would say, well, what does that have to do with Verizon? And then I could say, but you don't understand. It will translate to a lower price in Verizon. And then the person would ask me why, and I would be stumped. And I could say, well, because we might have less economic activity. And then the person would say, but Jim, does that mean that there's less cell phone activity? Historically, no. It's secular. So I am sitting here, while standing, and a very nice person is asking me about what to do. And I could default to this macro stuff, and even more tomorrow when we're 1.5 on the 10. Or I can just say, you know what, you're right. That's good. That's commonsensical. So we always have to default to common sense. And Catherine, common sense is not being a Pollyanna. Common sense is acting out of conviction, with discipline, not all at once, thinking more than about this morning, thinking about what happens when we get to 1.4. Are we going to be down more, which means we got to leave room, and looking at companies, say with the AAA balance sheet, J&J, PepsiCo, we can talk about that in our action alerts, Verizon, AT&T, which needs to refinance its debt, and we have to question not the macro, but what it means to all the people who work, the hundreds of thousands of people who work at these various companies. Waste management. Okay, that's a good stock to buy. I'm just picking that. It's like a company that's going to do better because there's going to be more construction. It's levered to American construction. I think that JP Morgan is uniquely going to be buying back stock, and people are going to say, well, listen, the yield curve is bad for them. These are primarily fee-based companies now. And do you know that Goldman Sachs is 60% fee-based? And you're paying 7 times earnings, and it's got the Apple card, which could be the number one card in the United States. So I am not a Pollyanna. I am simply stuck in the 4 walls of the companies and not the S&P macro. That has always been my case. It's how I did well, okay? And I'm just always surprised that there aren't more people. I'm going to tip the hat to Karen Cramer. Not more people like Karen Cramer who can say, you know what? The market's wrong. I'm going to borrow a huge amount of money and buy every bit of margin that we can and bet that the market's wrong and it will go up because things are better. This was something that if you go back in the annals of TheStreet, I'm waxing nostalgic about TheStreet because of things that are happening at TheStreet. I wrote a piece called Get Out Now. And my wife came in and said, at that point my wife, this Karen Cramer, said, no, go get me a soft pretzel. She threw her catalogs down. She would put her catalogs down a lot. She, like Lan said, throw it on the desk. This is all in confession, so I'm not being out of school. Go get me a pretzel. She liked the soft pretzels, the big ones, and because she's not from Philly. And when I came back, she had bought, I don't know, $500 million worth of stock. I said, well, you're going to ruin us. The market's going down. It's been horrendous for a long time. And she said, shut up, go get me a Diet Coke. And get her Diet Coke. Everyone's looking at my trading desk, and they're horrified because here I am completely humbled, just beat down. And at 2 o'clock, the Fed East emergency meeting, and we made our year. And then she said something, don't bother me again, bye. And she never came back. But it's going against the grain is not always bad. And I think that what happens is that she would uniquely, when she called the crash and said the market was going to crash the week before the crash, she uniquely was a person who had ice in her veins. It's time for ice. It's time for ice. Dial it back. Rein it in.
And don't be emotional, as you have said many times.
Don't be emotional, but those rules I created for moments like this, when you had to say, you know what, I'm going to go against the grain. I'm not going to have as much fear as everybody else. I'm going to look for opportunity. I'm going to be rational and say lower rates are good. Starter homes are going to be better. I know that the mortgage numbers aren't what we'd like because mortgage rates haven't fallen as much, but now they will. Housing punches above its weight. The banks are a little more fee-based, but they all trade together. High growth technology does very well relatively to everything else in a low interest rate, low economic growth environment. HubSpot being today's, HubSpot, Zscaler, CyberArk I didn't think was nearly as bad. People have a right to buy that one today. Zendesk, I think you can buy that. You can buy Ring Central. We're working, I'll talk about cloud-based stocks when we get to action alerts, but yeah, I just caution people that when you throw away JP Morgan down 4, you better have a better reason than tenure. You better have a better reason. It might not hold up under close scrutiny. It may just signify that you panicked. And panicking is not a strategy.
So let's talk about your real money column from this morning, where you talked about the U.S. and China.
5 hours ago. Yeah, remind me.
All right, so basically you said that that a lot of companies are saying that the tariffs are impacting them and that they're starting to prepare for it. But in reality, you're not seeing a whole lot of impact on these companies from the tariffs.
I
so
talk to
a
watch.
10%.
I talk to watch. Okay, Walmart, Amazon, Target, Costco, Home Depot. And yeah, there's going to be a little bit of posturing and a little bit of price increase in order to make the numbers. But the reality is that the consumer is so strong because of the economics, because of the employment. They're going to have great quarters. They're not going to have down quarters. They're going to have great quarters. And lower rates just only makes things better. See, this is, again, yes, if you're Cat, I'll reel them off. Cat, 3M, Emerson, United Technologies, Honeywell to a lesser degree, Dow Chemical. Those are companies that people are going to say, you know what, I'm afraid to own them. And you have to drill down individually and find out that Honeywell's doing quite well. United Technologies is splitting up. 3M is not doing well. Emerson's just okay. And then you take a look at a stock like Coca-Cola, okay? Coca-Cola was down. And I said, look, you buy Coca-Cola, you got a plus 3% yield. The growth is excellent. It does hurt by a strong dollar, admittedly. But see, everybody sees through that now. I mean, now, the actual profits may be less, but the fact is, people just look at the organic growth. And so the idea of the strong dollar controlling the stock price isn't reality. What controls the stock price is organic growth. And James Quincy's delivering fabulous organic growth. Now it sells at 24 times earnings, but you can calculate that and think that with that yield, 3% yield, easily I can craft a story that should be at 56. I easily can craft a story that Bristol Myers may be right ahead of the Celgene closing. If it weren't for the Tesla, I think the stock would be at 50. They had to get rid of a $2 billion drug. But it's not going to go straight up the market. It did. Some people think it retested and held. Some people say it didn't. I don't care about the market. I am looking at individual situations at every single level. You have a market down 540 points to Dow, and then it goes down 340 points. That's going to bring out sellers of everybody who bought at 500 because those people were scalpers, and they're the Karen Kramers of the world. They just bang out stocks and say, listen, I got a nice gain in an hour. But then there'll be longer term people who say, you know what, I want to be in CBS and CVS. CVS because the quarter was remarkable, very clean.
And we're going
to
talk about it over on Action Alerts Plus.
And then CBS because David was saying CBS could merge with Viacom. I think you buy Viacom. We can talk about that in our Action Alerts conference call. But I struggle to panic. How about that? I struggle to panic. If I'm McDonald's, should I panic? If I'm Easterbrook, Steve Easterbrook, how is this going to hurt my rollout? How will it hurt the Yum rollout? So you have to think like that. Now, the reason why more people don't think like that, why don't they think about Roku when they hear about cord cutting at Disney, which is I've been saying buy Roku every time you're cord cutting.
I love my Roku.
And I'll tell you why. I do. I'll tell you why. It's because I get up at 3:30 and I study companies. And I'm uniquely, I don't know, I don't want to talk about whatever mental illness creates that panoply of thinking, but, I'll go through 20 companies in the morning. And this morning, Disney wasn't good and Wynn wasn't good, but all the other companies were. Now, Wynn is a perfect situation because that's obviously Macau Gaming. Disney did not have a good quarter, but I can make a case that the best is next. Plus, we sold some Disney, so mentally, I'm right. Mentally in my head, I know that Disney's good. So if you study the S&P 500 like I do, and the Dow 30 like I do, you're stuck with actually being able to calculate in your head, as I have for hundreds of columns in Real Money, what should go down on a 1.5%, and that's what I'm using 10-year, and what should go up. And the vast majority of the stocks should go up. So I know the stocks. Now, a lot of the people who talk macro, and there are some people attacking me who think they know micro, but I don't think that they have great authority and don't represent rigorous thinking, will attack me and say, Jim, the S&P does trade together, so why are you sitting here giving giving me the components. And the answer is, I'll throw it right back at those people. Why don't you work it hard enough? Why don't you get up with me at 3:30? Why don't you work with me at 11:30? And you and I have a right to be able to have a rigorous discussion of why the S&P may be incorrect right now and the individual stocks are an opportunity. I'm not talking about the oil stocks. I want to be clear. I don't think that they have issue. BP has almost 7% yield. I like that. But there are always answers to these things, and I find they're homework derived. See, it's a craft. Not everybody can play in the NBA, and you have to practice. So it's a craft. I know we got to go on to our action alert call, but there is something to be said for working harder than everyone, which has always been, not the old days where I didn't sleep on Tuesdays. That was something I could have done with a lot of U-Band today, but then I wouldn't be able to do Wednesday. There's something to be said about looking at individual companies. And I'm going to leave you with IBM. Okay, IBM has some macro exposure. IBM's yield is safe. Balance sheet's actually not as bad. Red Hat is explosive for them. I think that there's a lot of good to the deal. The last quarter was quite good. Stock went up to the 150s. It's now down to the 130s. Well, I got to tell you, Catherine, that's attractive. I'm not recommending it right now, but IBM's attractive.
All right, Jim. So as you said, we got to go over to our Action Alerts Plus Daily Rundown show because I really want to ask you about Disney's new bundle.
What's so tough is that you get a United Health down 5, and you know that CVS Aetna is doing quite well. So you should be buying United Health. You should be buying it right here. But when I say that, again, there's the UNH to Aetna to CVS, back to UNH, granularity that people laugh at. But that's the craft. That is the craft.
I think this show was an excellent way to see inside how you approach stocks.
Well, I'm insane. I'm not that crazy, but the amount of work that it takes.
But I think that our investors got to see a little bit of that insight.
When I did my first lightning round in 1984, I stood on a podium, and people shouted out stocks, and I had to remember the prices: Inland Steel, Amoco, Exxon, Mobil, and I knew them because I worked hard to do them, and the stock price itself was just a metaphor. And that's who I am. And I can't deviate. I can't just say, you know what, the Dow is down very big, and I'm going to be emotional, and I'm going to take big actions, because obviously I'm not emotional, and I'm not taking big actions. I'm not making statement buys. I'm not saying, I'm going to buy 3M right here, and I'm drawing a line in the sand. Or that this is as low as Procter's going to go. I don't do that, which makes me more confident, not less.
All right, Jim, thank you so much for all of your insight as always. All right, guys, we are now heading over to our Action Alerts Plus Daily Rundown show over on actionalertsplus.com. I'm Catherine Ross, and we'll see you tomorrow.